The new economy is hot, and the old economy is not, at least for today. Investors were bullish on tech earnings and less enthusiastic about the old line industrials. The Dow loses 68 points, the NASDAQ index gained 64. Good evening, I'm Paul Kangas in Miami.
And I'm Susie Garba in New York City. A big day for earnings of stocks in the Dow. I talked with the chairman of one of the blue chips, Boeing's Phil Condon. Then we'll tell you why this Baltimore classroom could be a model for education reform in the new Bush administration.
Nightly Business Report is brought to you by
Compaq. Technology solutions to help you achieve your inspirations for life and work. Inspiration technology from Compaq.
Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series. Investment products distributed by investment professionals. A.G. Edwards, going beyond stocks and bonds to help you plan for a more secure retirement. A.G. Edwards, trusted advice, exceptional service. And is produced in association with Bridge, the global financial information company, providing real-time and historical market data, analysis, and news.
Good evening, everyone. Two-way traffic on Wall Street today. The Dow lost 68 points, but the NASDAQ jumped by 64 thanks to strong earnings from technology companies. Not only were earnings the talk on Wall Street today, but also the economy. Fresh data shows that the manufacturing sector is in a severe slowdown. As Suzanne Pratt reports, is giving more support for the Federal Reserve to cut interest rates when it meets in 2 weeks.
It's no secret on Wall Street or Main Street that the U.S. economy is cooling off. But now there's new evidence that the slowdown may be more dramatic than originally thought. Today, the government reported industrial production declined 0.6% in December. For the fourth quarter, it plunged 1.1%. That's the first negative quarter since the last recession in 1991.
The thing that struck me in this morning's report is that the weakness was very broadly based across every industry in the manufacturing sector. The only bright spots were electrical components and tobacco, and those are very slim strings to hang a hat on.
Some economists now say the manufacturing sector may already be in recession. As for whether the whole economy slips into recession this year, some experts say the answer is really one of semantics. In other words, even if the slowdown doesn't meet the definition of a recession, which is 2 consecutive quarters of negative growth, it will still feel like one to many Americans. The Federal Reserve is, however, trying to prevent a recession, and economists say today's weak report on factory output, coupled with fresh data that shows benign retail inflation, reinforces the argument that the Fed should cut rates aggressively when it meets on January 30th and 31st. Still, most economists see a reduction in short-term rates of 1/4 point or 25 basis points as the most likely outcome.
I think a 50 basis point cut is a possibility. I don't think it's the most likely outcome at this stage. I think if the stock market stays where it is between now and the end of the month, I think it will definitely lessen the chances of 50 basis points.
Some economists say the real issue for the Fed and financial markets in the coming months is not how dramatic the slowdown will be, but how quickly the economy will be able to recover. And right now, that's still anyone's guess. Suzanne Pratt, Nightly Business Report, New York.
Despite the good news of that 0.1% rise in core consumer prices, stocks opened in mixed fashion today, with Wall Street blue chips under profit-taking pressure in the wake of yesterday's 127-point run-up in the Dow Industrial Average, while the NASDAQ market rallied sharply as some investors were encouraged by some of the better-than-expected tech earnings out yesterday. At 10 a.m., the Dow posted a 41-point loss, but the NASDAQ index was sporting a 109-point gain. Continuing strength in NASDAQ, along with solid earnings from stalwarts like General Electric, General Motors, and Boeing, about which we'll have details shortly, helped the blue chip sector improve slowly but steadily throughout the rest of the morning. At noontime, the industrial average was up 22 2/3 points. NASDAQ index posted nearly a 126-point gain. Afternoon trading saw buyers turn less aggressive in the NASDAQ market, and the gains were slowly whittled away. That weakness also undermined the blue chip Dow Industrial Average, which fell to a closing loss of 68.32, putting it at 10,584.34. In today's 160-point trading range, the Dow closed down 121 points from the best level of the session, up only 39 points from the low of the day. The NASDAQ Composite finished with a gain of 64.23 at 2682.78. In its 88-point trading range, the Composite Composite settled about 74 points below its best